Okay, so what a day. In just the last 24 hours, two absolute giants in the consumer world, Nike and the Chagee, dropped their latest results. And wow, they sent some serious shockwaves through the market. Now, on the surface, sneakers and tea, they seem totally different, but trust me, they share a really troubling story that we need to unpack. Let's dive in and see what's really going on here. All right, first up, Nike. On April 1st, this is the number that investors woke up to, a 13.5% drop. I mean, that is a brutal single-day collapse for a company this size. So what on earth could have caused a reaction like that?
And then you have Chagee. And if you thought Nike's number looked bad, just get a load of this. A 95% plunge in their quarterly profit. 95%. So what is happening with these two global powerhouses? That's the big mystery we're solving today.
So let's start with Nike, because this is really important. The market isn't freaking out because of what Nike just did. No, it's terrified of what Nike just said it's going to do. This whole disaster is about the forecast, their forward-looking guidance.
I mean, this just says it all, doesn't it? An 11-year low. To investors, the path forward for Nike, which always seems so predictable, so solid, well, it now looks like it's just crumbling away. The market isn't just worried about one bad quarter. It's pricing in the very real risk that Nike's entire growth story is falling apart.
And here's why everyone is so spooked. Look, for years, Greater China has been Nike's unstoppable growth engine, right? But now, all the warning lights on the dashboard are flashing red. Management came out and basically said that engine isn't just slowing down, they expect it to go into reverse. They're forecasting a 20% sales decline in China. A drop like that puts enormous pressure on the entire machine.
Okay, let's switch gears and talk about Chagee. We saw that shocking 95% number, but headlines like that, sometimes they can be a little misleading. We really got to pop the hood here and see what's actually driving this thing.
Which of course brings us to the question on everyone's mind. Can a company's profit really fall that much that fast? Is this just some kind of weird accounting magic, or is the business genuinely in a free fall?
Well, according to the official accounting rules, the short answer is, yep, it's very real. A year ago, the company pulled in a profit of over 644 million RMB. This last quarter, just under 34 million. The math is pretty simple. That is a 95% dive right off a cliff.
So how did this happen? Well, it was basically a triple whammy. First, the core business itself actually swung from making money to losing money. On top of that, they spent a ton on organizational optimization, which, is just corporate speak for layoffs and restructuring. And finally, they had a big hit from share-based pay, which is an expense that hammers the official profit number. You put those three things together, and they just absolutely crushed the bottom line. But, if you ask me, all that accounting stuff isn't even the scariest number in their report. This is a 25.5% drop in same-store sales. That means the stores that have been open for a while are selling a quarter less stuff than they did just 1 year ago. That is a huge sign of weakness at the core of the business.
And this isn't just some one-time blip. It's not a fluke. This is the 5th quarter in a row that same-store sales have gone down. This is a deeply troubling trend that's been going on for more than a year now. Every quarter is another step backwards, and it's getting harder and harder to see where the solid ground is.
Okay, so let's connect the dots here. You've got a sneaker giant and a tea chain, and both are just getting hammered. The common thread that's weaving through both of these terrible reports is the consumer slowdown in China. That whole big post-pandemic recovery story we heard so much about, yeah, it is clearly not playing out the way they hoped. This table just lays it all out perfectly. You can see both stocks got punished. Both had different headline reasons for the disappointment. But look at that third row. The China-specific numbers are a disaster for both of them. Nike is forecasting a 20% sales drop, while Chagee is already living through a 25% collapse. That right there, that is the heart of the problem. So, what's the big takeaway from all this? After a massive drop, are these stocks suddenly a bargain? A great buying opportunity? Well, there's a classic saying in investing you've probably heard: don't try to catch a falling knife. You are way more likely to get hurt than you are to look like a hero. And that's exactly what the analysis suggests here. We are not seeing the early signs of a U-turn of a bounce back. Not at all. What we're seeing is a sharp, steep, downward line with no clear bottom in sight. Trying to jump in and buy right now is a total gamble. And look, here are the signals telling you there's no U-turn coming anytime soon. Nike's own management has explicitly told us to expect revenue to go down. They are bracing for their biggest growth engine to stall out. And with Chagee, you've got 5 straight quarters of sales declines. I mean, all the signals are screaming caution. This is just not the time to be hitting the accelerator.
So I'll leave you with this final thought to chew on. For any company, but especially for a one-time superstar, when that growth doesn't just stall but actually goes into reverse, what is the real cost of waiting around for a U-turn that might never come? That's a critical question for any investor to think about right now. Thanks so much for joining me for this breakdown.